So right now, because of the interest rate is high, so a lot of buyers are kind of like hesitate to buy properties, yeah, because of the interest rate issues, but they are trying to be creative. Okay,
Right.
some buyers are trying to be creative. So two things we have been hearing quite a lot from all different kind of directions. One is, can the buyer assume seller's loan? Let's say sellers purchase their house at 3%. And number two is seller owner financing.
So as far as assumable loans are concerned, there are two types of assumable loans. There's FHA loans and there are VA loans that are assumable.
So only these two loans can be assumed?
Exactly. I mean, and the thing is with the VA, it has to be a VA buyer also. So VAs are going to be a little harder as far as getting buyers involved because they have to be a VA buyer. Whereas an FHA buyer can be anyone. Yeah. So even with an FHA loan, say you have a buyer that is highly qualified, normally they'd be getting a conventional loan, putting a chunk of money down, they can still qualify for that FHA because if they're going to qualify and take over that lower rate, I mean, why not, right? Yes, they're going to have to pay PMI, which is going to be part of their payment, but they may be, you know, anywhere between 2.75 to 3.5%. So it's going to make up for that PMI that they'll have to pay. Basically, with those FHA assumable loans, what I'm seeing, I've got a couple in my pipeline right now. One of my agents, he has been targeting those FHA loans that are sitting on people's homes. Two that I have, one is at 2.75%. The other one is 3.25%. The only issue is that you're going to have a buyer that's got some cash to put down, because when they're assuming an existing loan, they're only assuming what is left on that loan. So say
balance.
Right. So if your sellers owned that property for 10 years, they're not going to have a huge balance. Or if they bought it before the market, you know, prices went up, they're going to have a smaller balance. One that I'm
let me clarify on this. Okay. So let's say Tammy is the seller. Tam has an unpaid balance for, let's say, 200K. And I'm a new buyer. So I need to come out cash for the unpaid balance for 200K?
So either that or they're going to have to find someone who's willing to do a second lien. They're few and far between. There may be some, like if they have a relationship with their credit union, they might be able to get a second lien in that situation. But yes, second liens are hard to come by.
When you say second lien, it's like second loan.
They can do a second loan with anyone. The assumption loan, they seem to be fine. Like the one that I'm about to close, they're not doing a loan, but they are borrowing money from a family member. So they're getting a gift.
So if the loan, let's say I assume the loan 200K and the selling price is 250K, then the 50K have to be paid in cash or the second loan, correct?
Or a second loan or gift or whatever. Yeah, it has to be made up somehow.
Gotcha. Okay.
Just now you were saying credit union is willing to do second lien. So the first lien will be the seller's first loan, right?
Right.
Okay. And then take over the unpaid balance for 200K. That is, let's say, you are the seller, you loan with, let's say, Bank of America. Okay. And your loan amount, your unpaid balance is 200K. Okay. Let's say the house price is 250K. Okay, so me as a buyer need to come out with 50K as cash down payment, and then assume your loan for 200K, that is your unpaid balance. So I take over Bank of America's first loan. I need to go to talk to, I mean, like say some other bank willing to do second lien. So it's just like my second
cash,
second mortgage. Yeah.
If I can have a cash to pay Bank of America, I can just buy it with cash.
No, the cash isn't to pay off the unpaid balance. It's to cover the difference between the selling price and the unpaid balance.
So it would just be the 50,000.
Yeah.
Oh, okay. I see. Yep.
So in a perfect world, in a perfect world, you want a buyer
payment. That's not a down payment, 50K. The cash is make up the difference between sales price and unpaid balance.
Right.
Yeah.
And then take over the loan. And whatever the terms, then the buyer will take over.
So they take it over just as the seller got it. So yeah, if they're sitting with a 2.75% loan, then they're taking that over for their new payment.
Okay. just now we're talking about like credit union. If I get involved with second lien, what is the second lien for?
That would be to make up the difference if they didn't have the $50,000 to pay in cash.
Oh, if they don't have the 50,000,
Mhm.
if they don't have the differences in cash.
Mhm.
then
Okay.
you would-
Oh,
so-
okay. Yeah, I understood that not all the bank will be willing to do second lien.
And
Okay.
the thing is, with the second lien, you're going to be looking at rates at probably 10, 11% would be my guess on a second lien. So
That's
it's
something
gonna be-
needed to consider too.
So yeah, you're assuming the 2.75% loan, but then you're going to be borrowing, 50,000 at how much, depending, for a second lien, because they're usually higher anyways. And I'm
Mhm.
seeing rates right now just on a regular at like 8%. I mean, anywhere between 7 and 8% people are buying, which is crazy.
Okay.
So with the assumable loans, what I'm seeing is your seller is the one that has to initiate the assumption process with their existing lender. They're the ones with the relationship. They're the ones that are going to have to reach out to get a contact to begin with. So they call their bank, they say that they've got someone that would be interested in assuming their loan, and could they have the assumptions department. Once they get that person will give them information on how the buyer can apply to assume the loan. Once the buyer then does the application, once that application is in, then there is a person with the assumable department that is assigned to the loan. At that point, then we all get a point of contact with the lender. So it's not until that point that we have any kind of contact with the lender. It's once the buyer has applied, then there's a processor assigned to the loan. Once that processor is assigned, it's a fairly similar process to your normal kind of lending process. They've got someone that's going to send all their bank information to, they send it to underwriting to get them all approved, all that kind of stuff. So that part's similar. And then the closing process is very similar too. So the lender will send me closing documents. They'll have a note deed of trust, all that kind of, it'll be an assumption deed of trust, a very similar process at that point. So it's just kind of the beginning part that's a little bit different from what we're used to. I have not closed one just yet. I've got one coming up that's supposed to close. It's supposed to close on Friday. I don't know if it's actually going to close on Friday. It may go into next month. But once I've closed and funded one, I'll be able to give you an update and see if there's any difference at that point. It'll look a little different on your closing statement because the new loan amount for the buyer is going to be a debit credit to your seller, because we won't actually order a payoff for the seller, because the new loan is basically just taking over the existing loan. So it doesn't actually get paid off. It's just getting transferred to the buyer.
Okay, so the contract part. Thank you, Lucy, for for the detailed explanations. So I have a question on the contract part. Okay, so Kim is the seller, I'm the buyer. Okay, let's say I'm a buyer, also buyer's agent. Okay, I'm going to write my own offer. Okay, to Kim. On my contract, does it need to be contingent upon the loan?
That's
because without contract, then you guys cannot start. But this loan issue need to kind of figure it out as well before the contract starts. So it's kind of like, okay, how does this work?
So what I have on the contracts that I currently have, I've got a normal residential contract, and then in the special provisions is where they've put it. In the special provisions, it says this contract is contingent upon the buyer assuming the seller's loan, because there isn't anything in your contingency addendum that covers a situation like that. So right now, the two that I have in the special provisions, that's where it's written, and everyone's just initialed off on that.
Does it need to give a date, like this contract is contingency upon buyer assume seller's loan and say, by the date? Because if the contingency,
it just goes on and on.
And I think the closing date might be needed a little bit longer as well, because
that is correct.
Usually some contract, like regular contract, maybe 30 days or 40 days. Because
these
of,
ones I've got, I think, are both 60-day closes on the ones that I have. Let me just look back at this one. I think the only thing they did on this, and it may be a question for the legal hotline for y'all, as far as if you needed a date in there for the contingency or anything like that. The one I have, it just says, and it doesn't even have a contingency. It says buyer to assume all costs associated with the loan assumption process from Flagstar. So it has that. And yeah, that's all they put in this contract. I don't know if he consulted anyone when he put this contract together or if he just kind of went with it. That's all I have in the one.
I think it also depends on seller's situation too. If seller is flexible, then you don't need to put time limitations over there. But there are some sellers, they maybe need to take the finance to purchase, to move into next home. They cannot just do whatever. They need to put some limitations on the time strain.
I know this one, I think, has been listed or was listed. I think it's been about a year, if not, I mean, coming up on a year. Yeah, it's been, and I think the seller was just like, take whatever we can get type situation, just kind of maybe contract to contract what the situation is.
If we are the seller's agent, represent seller's agent, and when we work with a lot with sellers, this may be a good strategy. We can bring it to the seller. Again, it can be only FHA loan and VA loan, right?
That's exactly right.
Okay, so again, Cam is rich. Candy is going to be the seller. Okay, so I'm the buyer. I'm coming to Cam to buy a house. So let's say same scenario, the house price is $250. Cam's interest rate is like 3%, and I'm the buyer.
So in a situation when you're dealing with seller financing, really you want to look at homes that are paid off.
Because just now when I was like, Cam, you're going to be my lender. And then I say, then back to assumable loan. Okay, just like, okay, good. Only on cash. Okay, Cam, thank you for being so successful. You have a cash.
Yeah, she owns her house free and clear. You can absolutely do then a seller financing situation. You actually have contract forms for that situation. There is the seller financing addendum. So then it would just be negotiating the terms.
Seller financing addendum.
And that seller financing addendum has all the details as far as then what type of loan, or I guess if type wouldn't be it. So seller, what interest rate, payment, when the payments are going to start, all of that is included in your seller financing addendum. So then that addendum, we have an attorney on staff that I can use then to create all of the loan documents for closing. So we can do that all in-house. Basically, I just supply my attorney with that seller financing addendum that lays out the loan terms, and he creates the documents based on that.
So basically, the buyer and the seller, they need to come out with the agreed terms, and then work with seller financing addendum and also attorney that possibly the title company can provide. Then work on these two, the seller financing addendum and also attorney, to draw up loan document. Kind of loan document, private loan document.
Because it's basic. The only thing you need is a note and deed of trust. So it's not a full loan package like you normally see when a lender is involved. So it's just a note and deed of trust. Yeah, my attorney can prepare those documents. I've seen people some people want their own real estate attorney to draw up those documents. That's perfectly fine too. But we have an in-house attorney. So, it's easy for me to get stuff like that drawn up.
Yeah. One of my past clients came to ask me, say, okay, so I'm the buyer, Cam is the seller. We went through the contract, everything. What happened is at some point that I cannot afford to pay Cam, the seller, what is going to happen? So it's just like, if I don't pay, I don't own. Is that right?
So the seller would have to, so in those documents that are provided, the note and deed of trust, it has the terms, it has at what point can the seller start the foreclosure process. They basically can foreclose on that property and take it back from the buyer. So they have that right as the lender.
When we finish the transaction and also go through, the seller financing addendum and also attorneys draw up contract, private loan thing, okay? The house, the title will under me, and Cam is just going to be my lender.
It's just like a normal, it still changes hands, title still changes hands, and yes, Cam just has the loan on the property. Yeah.
Okay, that's very good. I think I got all my questions answered.
Awesome.
Wow, cool.
Once I get this one closed, I'm hoping it'll be this week. I know they were waiting for one more thing from the buyer with the gift funds because he's got a family member that's giving him money to make up the difference. That was the only thing they had to clear to close it. So once I close this one, I will let you know if there's anything else that's different as far as closing and funding is concerned, but I don't think there should be. I think it'll be just like a normal closing at that point. But if anything weird comes up, I'll let you know. This is how it works at the end, but it should just be normal closing at that point.
Okay, Kim, have any questions?
No.
Cool.
Okay, as a seller, do you have any concerns for buyer situation?
Not really.
Thank you for trust. Thank you for your trust on this buyer. Okay, good. If we have some other different kind of thoughts or situations come up, then we're coming back to, consult with Lucy
Yeah,
from
shoot me an
Truly
email.
Title.
Yeah,
Okay.
and if there's ever
Yes.
anything that gets more into the attorney realm, the nice thing about Josh is that if you need to talk directly to him, he's available. So if there at any point it's something that goes over my head, then I can put you in touch with him and he can answer questions. But for the most part, with all these, I've closed all these types of transactions, so I should hopefully be able to answer your questions.
Okay, good. Thank you so much,
Thank you so
Lucy.
much. Good to
Thank
see your
you.
faces.
Yeah.
Okay,
Bye,
thank you. Okay, bye-bye.
Bye.
Bye.